No, it isn't. Whenever markets correct, as they have done in recent weeks, and particularly when the market that's led global equity performance for the last 2 decades has a bit of a wobble, it inevitably results in all sorts of soul searching. And what we've seen in recent weeks is a reasonably significant setback in the S&P 500 and some of its leading constituents. And that has got people thinking, as is usual in these sorts of circumstances, it's not really always completely clear what the trigger or catalyst is that has caused the market to correct. On this occasion, various things have got the blame, but the most popular accusation, if you like, is that Donald Trump's tariff agenda and the volatility associated with the on-off nature of the tariffs themselves is creating a level of uncertainty about the economy in the stock market. And that uncertainty has created all sorts of, I think, false narratives about, well, what higher tariffs will lead to, and this must be very, very bad news for the US economy. May also be bad news for the US trading partners, and as a result of all of that, the sort of logic has ended up in some people arguing that the tariffs will cause a US recession. And that, I think, is the sort of source of the concern that people have now about the economy and the stock market. And I think that narrative is completely wrong. In my judgment, there is virtually no possibility of a US recession this year, or indeed in 2026, or indeed beyond. I just don't see any circumstances in which the sorts of things that are happening now could or would trigger a US recession. I've read quite a lot of stuff about the tariffs, and I think it's very clear, and I've written about this on numerous occasions, Trump is using the tariff weapon as a negotiating tactic. I think he understands that tariffs could be quite damaging for the US economy and for various important industries in the US. I think he or his team must understand that. You don't have to be a Nobel Prize winning economist to have worked that out. But clearly the US wields global economic power, and Trump is determined to use that power. Ultimately, I suppose the US is the world's default consumer. It has a very significant trade deficit with Canada, with Mexico, with China, and the EU. And he's using that economic fact, I think, to leverage better terms on trade for the US economy. And I think the definition of better terms would be more reciprocity, for example, better access for US manufacturing exports to those global markets. And I think he wants to see industries that may in the last 20 or 30 years have exited the US economy and located in places like Vietnam or China or Canada or Mexico. He wants to see that manufacturing infrastructure come back to the US to create more manufacturing jobs in the US. That, I think, is an achievable goal. And I think he believes that by threatening what I believe are pretty punitive trade tariffs on exports from those economies, he thinks that he can extract better terms for the US. You know, it's all part of the MAGA movement. That's what's spooking people. And I think also it's the volatility of the trade debate, I think, that is also unnerving investors. One minute there are tariffs going on Canadian and Mexican exports, and the next minute they're off and there's another month to negotiate, then they're back on, then they're off. It's quite an extreme and volatile environment, put it that way. And I think that's creating a degree of nervousness. Now, the important thing is to try and quantify what tariffs might mean if they were implemented in full for the US economy. And I think they would be, at the margin, inflationary in isolation. And I think they will, at the margin, result in all sorts of substitution effects, which I've talked about actually in previous blogs. So there will be winners and losers from tariffs. And I think losers may well be the industries in the US that export to Canada and Mexico and the EU and China, because there will be reciprocal measures taken by these economies. And they will damage those industries that do export to those countries. So it's important to try and quantify what the tariffs will mean for the US economy and for different industries in the US economy. And that's a pretty tall order. But my overall sense is that because net trade or the totality of trade in the US economy is much smaller than it is, for example, in the EU or in the UK or in other major developed economies. I think total trade is something like just over 12% of GDP in the US, which is quite low. The US is, in fact, a very self-reliant economy. Proportionately, the level of interaction with other economies through trade is quite low for the US economy. So in order to believe that tariffs on specific industries will completely crater the US economy, you have to factor in all sorts of knock-on effects. You have to, I think, believe that the tariffs will be huge and incredibly disruptive, and that they will be implemented and there'll be retaliatory action, and all of this will culminate in lower growth, lower consumption, and all sorts of economic disruption. My guess is that is an extreme view and doesn't really factor in what I see as the reality of Trump's strategy with respect to tariffs, which is he's using trade as a weapon to extract better terms. And once he's negotiated those better terms, I'm not saying that the trade threat or the trade tariff threat will go away. I'm just thinking that it won't be as bad as people are currently thinking. And I think in a way, the lesson here is what's happening with respect to the war in Ukraine. A matter of a few days ago, people were wringing their hands. I was appalled by what I heard and read had happened in the Oval Office, for example, and the way that Zelensky had been treated in that brief period after the fallout. But what's happening right now is that it appears that the negotiations in Saudi have gone very well, and that Ukraine has agreed to the terms that the US feel are acceptable, and Ukraine has agreed to a 30-day ceasefire. And now the ball is very much in Vladimir Putin's camp. The intelligence sharing and military support that was suspended a matter of a few days ago have now been put back in place, and intelligence sharing is back to where it was prior to all of this row that blew up in the last 2 weeks. So I think it's hard to keep pace with the chopping and the changing. But I think what we can learn from Trump and his team's behavior is that they negotiate hard, threaten, and are prepared to do some pretty disruptive things. But ultimately, the aim is to get to a negotiated settlement, to get to some sort of agreement, to a deal. The art of the deal is alive and well with Donald Trump. So I think the same approach applies to tariffs. And I think the market and commentators are just getting the whole thing out of context. They're not necessarily out of context, but I think they're worrying too much about the headlines and not thinking about how Trump is using the tariff weapon as a negotiating tactic. Now, there are some other important factors to bear in mind, because as important as tariffs are, there are lots of very important things going on as well in the US economy, which will help drive growth in the economy. Not least, we know that there are tax cuts coming. We know that energy prices are heading down. They already have done, and I think they'll continue to do so. Some sort of deal with Putin is inevitable if a peace deal is going to be negotiated here. And that must mean that energy prices are going to continue to be weak. And I think, again, listening to Donald Trump, a key part of his sort of Make America Great Again policy is a cheap energy policy. And I think that's what he's driving towards. And I think it's important to bear in mind that lower energy prices will be positive for the US economy. It's also clear that in the background, the Fed is ready to cut rates. Now, I don't think there's any need to cut rates now, but if there was any sign of weakening in the US economy as a result of a worse outcome than I am expecting on tariffs, the Fed would be cutting interest rates as well. So I think there are mitigations. Even if you think tariffs are going to be a significant challenge for the US economy going forward, I'm more relaxed about that, by the way. Even if you think they are, there are going to be significant mitigations coming in the next 6-9 months, which will, I think, help to stimulate the economy, help to deliver higher growth for the US economy. So my fundamental belief is that actually the US economy will continue to grow somewhere between 2 and 2.5%. It may even exceed 2.5%, and that the notion of a US recession in 2025 or even in 2026 seems to me to be ludicrous.